The broadcast is now starting. All attendees are in listen-only mode.
All right. Well, welcome, traders. I'm Dean Jenkins of Follow Me Trades, and today I'm going to be talking about my the base, the foundation of my trading system using Ichimoku Cloud and Elliott Wave, simple version of Elliott Wave. I call it East meets West. And I'm really looking forward to this, and I really encourage you to ask questions as we go through this. And you can use the Q&A thing there on the GoToWebinar platform. So just before we jump into the material, type in where you're calling from. It's always fun to see. We typically get people from all over the place. But just to make sure you can use that function, and we'll let we got people still logging in, but go ahead and type in the question thing where you're at. Wisconsin from Trader, Indianapolis from EG. Midwest, you guys are getting some snow, aren't you? Or it's forecasted. We're having some pretty nice weather. I'm in the Northwest in the Seattle area. Dallas from John. Chicago's getting snow, says member. Snow, says EG, coming this weekend. Man, here we are into February, past Valentine's Day. We should be done with snow, right? Antioch, California from Tucker. Hey, welcome. There's someone on the West Coast with me. Buckeye State getting rain, says member. All right, looks like you guys got the question box figured out. And Connecticut from a Trader, East Coast. All right, well, good evening. Again, thanks everybody for being here. And you've probably been to webinars, I've been to them, where they spend way too much time, 20, 30 minutes setting the thing up before they actually get to the meat. Hey, I'm going to get to the meat really, really fast here. So, my name's Dean Jenkins. I run a company called Follow Me Trades. I provide an alert service. I provide some education for trading, and hey, I'm presenting because at the end of this, I'm going to make an offer, and I'm hoping you would buy some of my services. But I'm going to give you some valuable stuff that you can use whether you buy my stuff or not, right? So, at the end, let's see if it's a good fit. But meanwhile, you're going to walk away with some powerful tools for trading that you can implement, whether you buy my stuff or not. So, buckle up. We're going to jump into it. We're going to talk about how I use Ichimoku Cloud and Elliott Wave, combine two completely different systems. And when they agree, man, it's good stuff. All right. Many of you probably don't know me. You got invited here by Traders Expo. I'm not going to go through the whole resume and all that kind of stuff. If you want to find out more, go to my website, my homepage here. There's, quite a bit of information. I'll stick this over in the chat box for you. Let's make sure I can do that correctly. Here's my website URL to everyone there. And you can go check it out. So I'm not going to spend your time because you're already here, right? You're already convinced at least to be here, walking through my resume and stuff. I've been trading a long time. And we've been pretty successful at it, and I've helped other people be successful. And if you have any, if you want to see, the best reviews, go to something called tradingschools.org. And you may or may not have heard of that. Emmett Moore is a very colorful character, and he primarily absolutely goes scorched earth on trading educators and gurus who are not telling the truth, and an awful lot of them are not telling the truth. But you can go search for Follow Me Trades, me. He's reviewed me 3 times. He's crawled in really deep, and I'm one of the few people he's given 5 stars to. So check that out. So again, I'm Dean Jenkins, followmetrades.com. All right, and beyond my I can go through my resume and how long I've been trading and what my education and experience is. Who cares, right? The big question is, what kind of results am I getting in my trading for myself and for my customers? That's what matters, right? So let's, who are some of the top traders in the world? You just think about, there's people, we got 20-year-olds on YouTube doing meme stocks, right? I don't think they're going to go the distance, right? You got some people that did well in crypto and some that absolutely lost it, right? But in terms of traders that go the distance and are consistently profitable over, 5, 10, 20 years, who comes to mind, right? Well, Warren Buffett, yeah, right? Peter Lynch, absolute rock star. Benjamin Graham, who was the mentor and a professor at Wharton for Warren Buffett, right? He's a pretty good trader. Sir John Templeton, knighted by the Queen. Those were some folks who did pretty well at trading over the long haul. So how do we stack up here? Well, here's a quick bar chart. Peter Lynch is the rock star. He averaged 29.2% annual return over a very long time. And I got a little warning that says my audio is having issues. Is it okay, Anna? Everything good?
Looks like Dean experienced some. Hi, Dean.
Yeah, I'm here.
Okay, good. You're back.
Okay, yeah, a little internet glitch. Hopefully it'll stabilize here. Okay, so Peter Lynch, rock star. For a couple years, Kathy Wood of the ARC Fund, the Innovation Fund, was rocking it at 23.5. Benjamin Graham 21. There's Warren Buffett at 20%. The indexes, 7.5% basically. Here's Follow Me Trades. We've been rocking out 20% per year over 6 years since I've launched the service. So I think we're in the top tier of traders. And you put an asterisk by Kathy Wood because most of the people who put money into her fund put it in at the top last year, and they're down 50%. Ouch. In fact, I just saw right before the webinar on CNBC, there's a headline that she's getting a little defensive. She says, hey, our stocks are way undervalued and the recent losses are temporary. Well, we'll see. I'll tell you what, in my trading and with my customers, we've never taken a loss like that, ever. And we never will, because we use really, really disciplined risk management and money management. So, there's going to be people who tell you, man, I'm going to show you how to turn 5,000 into $1 million in 6 months. You guys know that's BS. Absolutely know that, right? So knocking out an average of 20% per year over the last 6 years, I feel pretty good about. I'm very pleased with those results, and I expect to be able to continue that. Okay. And the other rock star, BlackRock, Larry Fink, right? They're down 22% from their high last year, right? We do not incur that kind of drawdown because I'm taking directional trades long and short, and we have exit points, and if it hits our exit point, we get out at a small loss. The magic of trading, man, and it's not magic, it's basics, is it's all about your risk management and about your money management. And the key statistic is your payout ratio. What's the size of your average winner to your average loser? 2 to 1 is your target, or better. If you can maintain a 2 to 1 payout ratio, meaning your winning trades are double the size of your losing trades, you only need a 50% win rate, and you're going to be a profitable trader. And if you can push your win rate up, you're going to get more profitable, right? Yeah, and member says, cut your losses, let the winners run. And everybody knows that, but it's so hard to do it. The psychology of it can be super difficult. So I've learned to do it. I've learned all the painful lessons, but we're rocking that. Okay, so let's get into the meat of the thing here, though, right? Of course, a disclaimer, right? I'm a trader. I'm not a financial advisor. I'm not giving financial advice, right? All trading and investing involves risk. Risk control must be used at all times. It's the cornerstone of successful trading. So what are we going to cover today? I'm going to talk about some of the tools that I use in trading. A little bit about Dow theory, a very simple little sliver of Dow theory. Charles Dow was the founder of Dow Jones and the Wall Street Journal back in the late 1890s, right? And he wrote a series of editorials that laid out the theories he had developed on how the market works. And part of that is trend analysis. We're gonna leverage that, and it's actually pretty powerful stuff and still relevant today. I'm going to give a brief overview of the Ichimoku cloud, how I use it. some history on it, how I use it. I'm going to give a brief review of Elliott Wave theory. Then I'm going to show you how to use them together. And then I'll show you some of my current favorite trades, what I like right now. And I'd be happy to analyze some stock charts that you're interested in. We'll do as many as possible. And traders asking, is it going to be a replay link? Yeah, I think Anna is teed up to send a recording to everybody who registered for the webinar. All right, looks like more people have joined. Hey, welcome. Glad to have you here. All right, so let's jump, man. 3 key tools: Dow theory, Ichimoku cloud, Elliott Wave theory, right? And just a disclaimer, I just cannot stress this enough. Hey, successful traders manage risk. I said, if your payout ratio is 2 to 1 or better, you only got to win half your trades. Even you can be even less than that, sometimes 40%. You can still make money, right? But the successful traders, they know and they accept at a emotional level that any trade can fail. So you just have to be prepared for that, right? They determine how much they're willing to lose. They don't take a fixed trade size, right? You adjust your trade size based on the trade parameters. They exit trades at predetermined loss levels without exception. They're not upset if a trade fails because they know that's the deal, right? We're playing a numbers game, right? We're not going to win every trade. They understand it's a trading system performance that matters. It's not what happens with a given trade. That's just, no matter what indicators or setups you're using, this stuff has to be in place. You have to embrace this and have a good risk management, money management system to be successful. And then it comes down to whether your setups give you an edge and, how much you can win. All right. Dow theory. So some of these things, when you after you see them and they're pointed out, you go, man, that's incredibly simple. But sometimes we have to have it pointed out, right? So price on a chart doesn't move in straight lines. It doesn't go straight up. An uptrend, according to Charles Dow, and this holds 100 years later, right? It's a series of higher highs, higher lows, higher highs, higher lows. That's an uptrend, right? And that's the bull trend, right? As long as the declines between the highs stay above the previous lows and then go on to new highs, that is an uptrend. Downtrend is lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. As long as that pattern continues, it is a downtrend. Well, so what? Well, you jump in a long trade, right, and it goes up, and then it starts pulling back. Well, that can cause a little stress, right? You say, oh man, should I get out? Am I going to give away future potential profit, or am I going to let a winner turn into a loser, right? By knowing this pattern and using it, right, you can have a degree of discipline in your trading, and it can relieve stress. Because what I do is, I said, every trade, you got to have a predetermined exit point. So I start with my exit point at the low, then it goes up. As long as it doesn't come back down to the low, I'm staying in the trade, right? And then it goes up to a new high. I move my exit point to here, and then to here, and then to here, and then to here. And eventually that's going to get hit. You're going to close the trade. You're going to have participated in the full trend. That's the deal, okay? It takes 3 data points to confirm a bullish trend is beginning. It takes a high, a higher low, and then a new high. And you go, new trend's beginning. Awesome, right? And then we just move our exit point up, and we call it a stop. It doesn't imply that you have to have a stop loss, stop market order in place. Some people don't like that. They think the market makers are out to get them, right? You just have to have a predetermined exit point. Whatever the order type you're using, doesn't matter, right? You have to get out when the trend ends, and it's proven. You can't call the absolute top in an uptrend, but you can get out after participating in the full trend. Same deal with a downtrend. Low, lower high, new low. Hey, downtrend is beginning. It continues, and then we close the trade. Trend's over. Like I said, you point these things out, and after you see it, and you can start seeing it on charts, man, that's painfully simple, but sometimes we just have to have it pointed out. Right? The most powerful things are sometimes the simplest things. So that's Dow theory and how we apply it. Ichimoku cloud. It's also known as Ichimoku Kinko Hyo. It's a really cool indicator, and it's provided on any legitimate charting platform. If you're using, I'm using TradeStation. I also use Thinkorswim. There's a couple others that have it. If you're using Schwab's Street Smart Edge or Fidelity's thing, those aren't, they're fundamental investor platforms. They're not serious charting platform. So they're not going to have what you need. You need a serious charting platform, okay? But it's going to be there. This thing was developed by this handsome fellow, Goichi Hisada. He was a Japanese journalist, and he started working on it in the 30s, and he spent a little time on it, and he ended up publishing it in a book in 1969. What's interesting is he was working on his theory in the 30s at the same time that Ralph Nelson Elliott was developing his, which is the other serious tool that I use, okay? But what is Ichimoku Cloud? I'm sure many of you here have heard of it, maybe. It's a pretty cool deal, right? But first, before we get into Ichimoku Cloud, let me ask you a question. How many of you believe that moving averages matter? In terms of indicators and charts, analyzing price action. Do you believe, just type in a yes or no in the question box, do you believe moving averages matter? Here we come. Lots of yeses. Thank you. Thank you, EG, Active, Tony, John, Edward, Larry. Yeah, of course. Right? They're the most popular and they're the easiest indicators on your chart, right? Totally. Right? Well, Ichimoku Cloud at its core is really just a little different look at moving averages. Turns out it's a powerful different look, right? So a simple moving average on a chart, it's just the average closing price over some number of variable numbers of previous bars, right? A lot of people use 2 or 3 simple moving averages to look for crossovers, look for direction. My charts, on my daily charts, I use a 200-day moving average and a 50-day moving average. And, those are really, really popular. And when they cross, when you get a 50 cross above the 200, it's called the golden cross. When you get the 50 cross below the 200, it's called the death cross, right? They provide useful information about the trend and also support and resistance areas. Okay, so moving averages matter, right? Ichimoku Cloud. So the simple moving average takes the closing price, which ignores some of the outliers. Okay, Ichimoku Cloud uses the average of highest high and lowest low over some variable number of previous bars, and they have 3 look back periods, and they combine them with some derivatives, but they end up with a cloud, right, and a range, and it's pretty powerful, right? So what are the elements of Ichimoku Cloud? First thing is the Tenkan line, right, or the conversion line, right? It is the fastest line, the shortest look back period, right? And the formula is the highest high, lowest low divided by 2 for the last X periods, okay? And there's going to be a default setting in your indicator, your charting platform for that. We'll talk about that default setting, okay? But when it crosses over the longer term one, it can indicate trend change, but it can also have some false calls, okay? So Tenkan's the fast one. The Kaijun, or the baseline, I've bolded it in purple here, it's got a longer look back period than the Tenkan, okay? So you see the Tenkan's yellow, the Kaijun is purple. All right, we have a little audio problem. Are we good? Are we back?
Dean, sound check.
Yeah, I'm here.
You're back. Great.
Okay. Yeah, what a headache. But we'll keep pressing on here. Okay, so the Kaijun is the longer one, and then the standard factory settings give you a projection out to the future, but there's a line on this cloud area called span A, means going first. It's a faster leading edge of the cloud, and then you get a span B, which is a slower part of this cloud boundary. Okay, and the formulas are there. Okay, and then there's this cloud between span A and span B. It's called the cloud, or Kumo in Japanese. And this is important. This cloud confirms trends, and the thickness of the cloud determines the strength of the trend. And the thicker the cloud is, the more probability it is that it's going to provide support as as price comes back down to it, that the price isn't going to break through it. Price breaks through typically when the cloud gets thinner. So it's a really nice indicator to show the strength of the trend and the difference between, the span A, span B lines, okay? Now, in the typical textbook approach to Ichimoku cloud, there's a set of rules about crossovers for the Tenkan Kaijun and being above the cloud, and they have something called the Chiku line. All right, this is what the standard Ichimoku cloud presentation looks like on a chart. All right, you've got Tenkan Kaijun, the yellow, the purple, and then they've got this Chiku line, and they've got these weird colors, blue, right, and orange for the cloud, and that is so that is so crowded. I can barely see the price bars. I can barely see price action. So that's not what my display for Ichimoku cloud looks like. Okay, we'll get to that. All right. Here's what mine looks like. I've just got the cloud, and I've got it set so green is up and red is down, because that makes sense to me. And I've reset the offset back to current price, because all I really want to know is when price breaks the cloud. I'm showing the SPY, the SP500 ETF here, right? When price breaks the cloud up and the cloud is green, that's a pretty strong indication of an uptrend. And I'm going to confirm it with some other tools, but that's, that gives me powerful evidence that an uptrend's happening, and then it's going to predict support areas, right? And the thinner the cloud, the higher the probability of a breakthrough. Thicker the cloud, the stronger the support. That's really good stuff, right? So in terms of interpreting the cloud, right? Cloud's green, price is above it, right? Wow, that's a long, right? Cloud's red, price is below it. That's a short, okay? The standard rules for interpreting Ichimoku cloud talk about the Kaijun Tenkan cross. Well, it's axiomatic, because if price goes above the cloud and the cloud is green, they've crossed. So if that's axiomatic and it happens every single time, I don't need to see it. I don't need to clutter my chart up with that and be confused, right, with something like this. Gee, all these lines, man, what's going on here? Okay, so I just simplify the display because I'm only really looking for the signal that matters to me. That's the deal, okay? So that's Ichimoku cloud. Let's talk about Elliott Wave. So, a lot of people have had a bad experience with Elliott Wave, and maybe some of you are rolling your eyes right now. Oh, we've heard about that, and it's super complex, and it's non-repeatable, and every practitioner has different interpretations. Those things can be true. I think what Ralph Nelson Elliott came up with when he developed this back in the 30s was actually pretty simple, and all he said was, "Hey, I just observe on a chart that there's this crowd psychology that moves between optimism and pessimism in these natural sequences, a series of impulsive and corrective waves." And it turns out that these waves move in somewhat predictable ways to somewhat predictable levels using Fibonacci retracement levels, Fibonacci extension levels. Fibonacci numbers are super cool. It's a ratio that turns out it occurs in nature and spiral galaxies and hurricanes and shorelines and pine cones and snowflakes, all kinds of cool stuff, right? All kinds of complex systems, Fibonacci numbers show up. And the financial markets are complex systems, and we see them having value and application there as well, all right? All right, just keeping up with the questions here, the comments. What is my focus time frame? Do I trade daily, weekly, monthly? My sweet spot is trading daily charts. I trade directional trades, long and short, using options. That's my sweet spot. I day trade, and my analysis, sometimes, when there's a good setup, I got the time, I'm in the mood, I'll day trade, and sometimes we'll take a longer trade, but my sweet spot's daily charts. But these concepts I'm giving you can be applied to any time frame. And any instrument that charts using open, high, low, closed price bars. All right. So Ralph Nelson Elliott said, hey, they've got this crowd psychology, right? You've probably heard of the efficient market theory that says that the value of a particular equity is determined by the traders from all the known public information. And I believe that. I just think there's an addendum to that, and it's it's what they currently think, right, about all known public information for a publicly traded instrument. And it changes. It's an auction, right? And as something starts going up, how many news stories have we seen? Whether it's Tesla, right, or Rivian, or you pick your AMC, right? There's crowd psychology that happens, right? And people start kind of flocking to the hot thing, or hearing about it, or seeing the indicators, and it goes up, and then profit taking starts, and a correction happens. I'm only interested, in trading an impulsive move, this big wave 3, or the correction if there's enough profit. Corrections are tricky. And then the high probability is this wave 5, right? After a big move, after a correction into an expected level, taking the continuation of the original trend up to its final level. That's a high probability trade. So that's how I'll just keep this thing simple, right? Here's how some of the people approach it, right? Hey, Elliott Wave's easy, right? We got the grand super cycle, and the cycle, and the minor, and the minuet. And there's only 144 permutations for you to memorize here, and you'll be good at it. That's nonsense, man. I couldn't do that. I'm not even going to try. I just keep it simple, right? I'm looking for a big impulsive move, a correction, and a continuation. 3 setups. And it can go up or down. There is a great book. It's written by Bennett McDowell. It's called Elliott Wave Techniques Simplified. He was and is my mentor. He taught me what I know, and he invited me to contribute a chapter to that book, and it was fun. So Elliott Wave really is easy if you're just looking for 3 setups, right? And here's what it looks like, right? Here's wave 1, 2. We use Dow theory, right? Wave 1, we'll move up. Wave 2, right? And Dow, high, higher, low, new high, boom, right? There's our wave 3 entry. Wave 3 starting, and we got high, higher, low, new high, high, new high. And it's above the cloud, right? It broke above the cloud. How cool is that? Neil says, why is wave 3 not the easiest one to catch, since it's the largest? Because it kind of comes out of nowhere, right? Wave 5 is easier because you have this history of the equity following a well-prescribed pattern. When it first starts, it's just kind of coming out of a channel. You really don't know. You can't establish a target for wave 3. But after you had a wave 3 and a wave 4 correction, you can absolutely come up with a target zone for wave 5. That's what makes it higher probability, right? Wave 3 has a bigger move typically, higher profit if you can catch it early, but there's sometimes fake outs. All right. So look at this. Here's a Dow theory confirmation. High, higher, low, new high, above the cloud. Trade entry, man. Okay. And then we go up and we trail our stop up. We take profit. We scale along the way. The correction starts. And here we go. Wave 5, right? Oh, high, higher, low, new high, above the cloud. Rock and roll. Take the entry. Here's the wave 5 target zone using Fibonacci extensions. These are retracements. These are extensions. And Trader says, can I comment on after the presentation on Google? Yeah. If I don't remember, I'm going to open it up for that. So you're first in line. Okay. All right. We use Dow theory to help with our stop management, right? The exit. Again, that doesn't imply that it has to be a stop loss market order, right? But we set our initial exit point at a low, and then as new lows are established, we trail it, right? I take partial profit in thirds along the way, particularly as we cross key Fibonacci lines, right? And then we finally go hit the stop, final last exit point, we get out of the trade, take a win. It's awesome, right? So we just keep trailing the stop, the exit point, using Dow theory. It's cool. Let me show you a few things before we open it up for symbols to analyze. First, you came here and, the offer was for me to show you something cool, and I want you to be able to walk away with something to use right away. Okay, tools you can put into play in your own trading. Like I said, I'm going to make an offer at the end. I'd love to have you participate in my services, but I want to deliver on a promise of giving you something of value for attending the webinar. So here's the standard Ichimoku Cloud settings. This is TradeStation. If you do it on TOS, it's going to look very, very similar, right? Let's clean that up, man. That is super hard. Like I said, I can't even see the price bar. Right? Let's format this. So I don't care about the Chiku line. It's not a part of my deal. So I'm just going to turn that off, right? Chiku 0. Okay, these are the factory default settings that are going to be on every platform. Tencon 9, Kaijun 26, Spanby 52, blah, blah, blah. I use different settings. I've optimized those. So I will show you how you can get my unique settings. It's going to be an awesome bonus at the end, okay? But you can use these. They are okay. I think mine are better. I've back tested it. Let's go to style, right? Let's go to the Tencon. Let's just make that dude clear. I don't need to see it because remember its cross is axiomatic. So Tencon Kaijun are now clear, 100% clear. They're not going to show up, right? Oh, and by the way, this up color of blue and this down color of orangish thing or azure doesn't make any sense to me. Let's just make that up. How about green? Down. How about red? Okay. See if this works. Well, that's a little cleaner. Because all I care about, what color is the cloud and is price breaking above it? That's what I care about. So you can do that, and you can use these the rest of these factory settings in your trading. I have some that are optimized, right? But check this out. Look at this big move here, right? This thing, when it broke out of here, it broke out at about 465, and it went to, 19 bucks. Wow, that's 4x. That's a big move. That's a wave 3, right? And you can see when price broke above the cloud, right? Dow theory came out of this channel. It was in this super narrow channel for quite a while, right? High, higher low, new high, prices above the cloud. It's better when the cloud's green, but this was a pretty good breakout. So that could have been an entry. I didn't see this thing until here. This is about the time it came to my attention. So I would have liked to trade that. But what you can do is you can analyze this and go, well, this looks like an Elliott Wave pattern to me, right? And I just go, what? Let's look at my retracements, my Fibonacci retracements, because we expect after a big rally, series of higher highs, higher lows, higher highs, higher lows, we expect a correction. We got it, right? Cloud turned red, price was heading down. We expect it to retrace to a Fibonacci retracement level of 38.2 to 61.8. And I've coded these lines blue so I can kind of see my zone. Wow, right into it. Right? This red line that goes down below that red line is too far. It's no longer a correction. That becomes the new impulsive move. Okay? Perfect correction. And then, oh, look, after the correction, high, higher low, new high above the cloud. Wow, it looks like the trend is changing back up, back to the original uptrend. And I can take my Fibonacci extension lines and I can predict with reasonable certainty where it's going to go. What's the target zone? This is a wave 5 Fibonacci extension target zone. I took this trade back here. I published it to my subscribers. We are now in the target. Now, I'm not going to exit a trade just because it hit the target, right? I establish a target so that I know, is there sufficient reward and risk, reward relative to the risk, the ratio? Can I make more on the trade than I would lose if it fails? That's the big question, right? That's what my target's for, right? Well, this one had a huge reward to risk. It was like 5 to 1. And we're currently sitting at, call that 25% profit on the trade. We got in on February 1st. The options are at 145% profit in 13, 14 trading days. They don't all go that way, but let's check this out, okay? I got eight open trades. 5 are in profit. Not every trade wins, and it ain't over yet, right? But let's just take the option current open P&L, throw it on a spreadsheet, see how we're doing. So this is the oldest trade here is one that I opened on February 1st. We just opened a new one today, SPSX, which is an inverse. We are shorting the SPY with that. Okay, 2,200 bucks in profit in the last, so far. We haven't booked it yet. We haven't closed the trade yet. It could get better. It could get worse. But that's a pretty good snapshot for, call it 2 weeks, just under 2 weeks. These are all sized based on a $50,000 account. So that's 5% increase in the account in 2 weeks. We're not promising this whole meme crypto nonsense, right? About how, you guys know better than that, right? You totally know better than that. Okay. All right. Let me show you. So this applies. I showed you that daily chart of BCRX. It's awesome. But this was fun. I run a trading room in the morning for part of my service. I have a live trading room. Okay. This morning, we were looking at the SPY 10-minute chart, intraday chart, right? We were looking at it at 7:30, right as we were closing the trading room. We were looking at this, and you can see these bars are a little bit faded back. These are brighter. That was pre-market. This is when the market opened, and I said to the trading room, and this is recorded, right? And you can double check me. It's for the subscribers, but it's I've been audited so many times. On my website, I show you the third-party CPA audits. The results I'm showing, they're real, man. I'm not claiming the nonsense. I'm claiming solid profits, and we get audited, and they're real. All right, but yeah, well, I was on record this morning in the trading room at this point in time saying, hey, we just had a big impulsive move down, right? And what normally happens after a really big move down is a correction. And so I said to the traders, just watch the move from the open, right? Watch the move from the open. Watch for a reversal into these Fibonacci levels, these blue lines. After that, don't chase this down. After that happens, then wait for a continuation. Wait for it to turn and pick up that original trend, and that's where your trade's going to be, since it's already happened, right? This is over, right? Let it retrace, show evidence of reversing, take this trade, and then using Fibonacci extension lines, we'd come up with a reasonable target for what was going to happen. And these green lines are the target, and lo and behold, it exceeded the target, and here we are after hours, right? Exceeding a target is a good thing, right? That is okay. That is not a miss. Right? We're not going to close just because they hit the target. Right? Target is there to go, does this have sufficient profit? Well, absolutely. Right? If we were looking for the short entry as it started proving that it was going to turn, right? Well, that's a lot of profit for a day trade, right? Super. So it works on intraday time frames as well. That was the point of that whole thing. So let's go back to our daily chart here. We'll start here. And I remember, so Google, Trader would like to look at Google, okay? Alphabet. I heard they're going to do some of the same changes that Apple did that absolutely crushed Facebook's ability to do the pinpoint kind of advertising that was so valuable. All right. So you just stand here and you make a few observations about the chart. You go, well, was there a big move? Well, yeah. This whole trend up. And look how, for the most part, the cloud, it called the beginning when price broke above it. It showed many of the key support areas in that trend. And when we got a serious break, it broke here, right? But the cloud didn't turn red, right? It broke here, went back above. Now it's broken here, and the cloud is turning red again, right? This looks kind of like the trend is ending, doesn't it? Right? This is a big move down. Got some volatility here. It was down hard today, 3.8%. The cloud's red, right? So we can predict where that's going with Fibonacci retracement lines. Okay? Now you got a few things to worry about before you go short Google Alphabet. What do you got to worry about? Well, we like Dow theory, right? We got a minor low, lower high, new low here, but we've also got a really, really strong support level. So do you really want to, if this is a support level where it pivoted before, do you really want to take a short into that? Well, depends. Is that a sufficient profit for you? Maybe, right? But if you're a little more cautious and a little more patient, you could go, what I'd really like to see is, I'm watching this support level, I'd like to see a serious low, lower high, bounce off the Ichimoku cloud and go lower a couple times, right? I could put a stop here and then have a target here. So that's kind of down the road. So I would just keep watching that. That would be my play on Google. Okay, that's how we use the tools. FCX or ED. Report McMorran. I've traded this before. Okay, again, you just kind of stand back. What's the story? What's the story? Well, there was a really big move. There was a correction. Looks like it's heading up. Cloud turned green. It had a little red, turning green again. Wow. This looks like that was wave 3. This was wave 4, right to the correction zone. Kind of looks like it's starting wave 5 up. It's having a little trouble getting there, right? But it's got a nice target, right? Kind of like, this is kind of like the inverse of what we saw on Google, though, isn't it? Right? What we would like to see, we've got a kind of a serious pivot point here. That could be resistance. So what I would like to see for FCX, to take a long on it, get this big move. I'd like to see it pull back to the cloud, reverse, and go through that high, right? And it may not be that clean. It may do, but I'd like to see this high. I think that's worth waiting for. That's going to increase the probability because we took out this, look at this resistance level too. It reversed here. It reversed here. Could it reverse there again? Well, that looks like historically a pretty strong level. I'd like to see it get above that. That's going to mean new things are happening, right? And I can put a stop here, I got a target up here, right? That's what I'd like to see on something like that. Member Sean says, do I have settings for the clouds? So I showed you how to adapt your platform, make it look better using the factory settings. I have proprietary settings. I'm going to show you at the end here, for too long, how you can get those, okay? Ed, you are totally welcome. All right. Just starting to make sense, just how I approach a chart and use these tools. And again, hopefully you're walking away. I showed you how to configure the cloud. I showed you how to use Elliott, a simple version of Elliott Wave, how to use Fibonacci retracements and extensions, right, to analyze a chart. This is stuff you can use whether you buy my service or not, right? And I wanted to deliver that value for you. Okay. Member webinar, IRM Disney Gold. Let's look at gold. Gold is super interesting. Gold's doing something, right? With all the geopolitical tension, it's no surprise that gold is taken off, right? GLZ's taken off. I don't like the setup on it. Barrick, we've traded this many times. It's a great one. What's the biggest move on the page? It's that move down, right? It's wave 3. What's the retracement look like? Well, it's already in the retracement zone, and it's approaching a prior high. So trying to go long here, a little tough. Okay. Larry said, is there going to be a link? Yeah, Anna's going to send a link out after the thing's done. Totally. Trader, snow. All right, so here's the thing about Elliott Wave. Not every chart's going to conform. But you can, is what's called wave inside a wave, so you can analyze a small portion of the chart. Okay, and that's what I would do here, right? Because we had a huge move, 100% retracement, huge move, partial retracement. So this catches my interest. So I'm going to analyze the chart from here to the right. That is a Elliott Wave thing, right? So let's just do this. There's the big move. What's the expected retracement? Oh, look, right here. And oh, look, low, lower, high, new low. It's heading down, right? So what's the target for this? New lows below this low. This is actually in the target zone. So this is what I do when I'm going to go, where would I put my stop, right? Well, that looks like a good place, right? It went up and reversed. So that's a good place for my stop. Let's make that red. Because if we hit it, we're going to lose. All right? We would enter the trade, current price, if it's there tomorrow at the open. I use cyan for my entry, and then my target, I'm going to say, okay, I'm in the target zone. We got this prior low. I'm going to go just above this prior low. So there's my target. Now what I can do with this is visually look at this. And let's get rid of this for a minute because it's distracting. Look at these lines. What is the ratio of the difference between the stop and entry and the stop and target? About 3 to 1. That's what I want, right? If my target were here, that would be less than 1 to 1, which means if it loses, I'm going to lose more than I will win if it wins. I have zero interest in a trade like that. I want this, right? If I lose, I'm going to lose this much. And what I do is figure out the position size. How much capital am I going to lose if I hit that stop? I'm going to limit that, right, to no more than 2% of the account, typically 1%. So $50,000 account, we're going to say $500, right? I'm going to buy the right number of shares or contracts. So if it hits this, I'll lose $500, no more. And then if it hits this, I'm going to make $1,500 or $2,000. That's how we like to trade. How about that? Okay. Remember, Sean wants to look at E-mini. Here's the continuous contract. It's going to be this, it's the S&P 500 futures, right? I'll give you a clue. I'm short. I am short the S&P. Took it today. I took it by going long SPSX, the 3X inverse. And I sent that to my subscribers. And super happy. Okay. So there's waves inside of waves. So, how long's the S&P been going up? A long time, right? Since the pandemic hit, right? So the long-term thing on the S&P 500 is eventually there's going to be a correction, and it looks like it could be starting down into here. That's a big correction, right? In the short term, we can also do what's called waves inside of waves. Depends on the time frame you want to trade, right? It's pretty cool. These waves are what are called fractal. The patterns appear at any level of magnification, right? And so what we can do is trade this. There's a retracement. And what's the extension? A little shorter term interim move with a target down in here. That's what I'm trading. And if it keeps going, well, that's just life is good, right? See how that works? Pretty cool. And Larry's asking, do I examine different day periods? I look at 10-minute, and then I use range charts for intraday. 10-minute for the roadmap, range charts for the entries. When I'm doing daily charts, I will look at the 60 to see if there's a better place to put the exit point. I'll look at the weekly to see what the bigger picture is. But from my swing trading, I focus in on the daily chart, right? But I do sometimes do multi-time frame analysis, and for day trading, I like 10-minute and then range charts. The concepts I'm showing here apply to any time frame. I showed it on the 10-minute SPY today, if you were here for that. Okay. Hey, we're pushing up close to an hour. I wanted to hold it under an hour, really honor your time. So we looked at some interesting things there. Neil, range charts, it really depends. on the instrument, right? Because it's a function of both volatility and price. Here's a range chart I'm using on the SPY. I like to day trade the SPY with options, right? So here, a range chart, range bars are not tick bars. They're different. You notice every bar is the exact same height. You know, the open, high, low, close have the same extremes. It just says, hey, when price exceeds the selected range, it's going to paint a new bar. These provide excellent entry and exit points combined with the Ichimoku cloud. And for the SPY, I'm currently using a range value of 0.13, 13 tick price change. Okay. There you go, Neil. All right. I got an offer. I said up front, right? I said up front that, you know, I'm going to give you something of value just for attending, and I hope you agree that I've done that. I've showed you how to use Ichimoku Cloud, Elliott Wave in conjunction with each other, and I've showed you how to change some settings on Ichimoku Cloud to make the thing easier to use, and I've given some demonstrations of that, right? But I have an offer for you, right? I run a stock and options pick service where, you know, I publish alerts on trades. I provide tools for risk management. I provide training for risk management, a whole bunch of stuff. Discounted offer, $97 a month, right? You take a trial for 30 days for $37, right? And then you get a discounted rate, 25% discount, right? That's 100% money back guarantee. I just believe in being fair, right? I want customers who are happy. And if it turns out it's not a good fit, then hey, let's just acknowledge that and let's just move on, okay? And you know, the last thing I want is somebody to be unhappy. Okay, so you can try the thing for 30 days, for a month, for $37. After that, it's $97 a month. It's 100% money back guarantee, refund on request, no questions asked, no hard feelings. And the link is there. It's in the chat box. If you want to hit that, okay? What do you get with this whole service, right? You get a watch list of potential trades that we are tracking in the trading room of like, hey, this looks good. And if this thing happens, then this is going to be a great trade. You get alerts, email, and in our app when you're getting into a new trade, exact detail of the trade, the entry, the stop, the target. Most of the trades can be traded either with shares or option contracts, your choice, whatever you prefer. I provide the information for both. I provide the entry, the stop, the target, and then the contract that I like that I'm trading with. You get alerts on the email and in the app on your phone when I make a change. We're going to move a stop, take a profit, close trade. You get access to live trading room Monday through Thursday, 30 minutes at the market open. You can attend if you like. A lot of people like to come in, ask questions like we're doing here, look at charts, see how the sausage gets made. Some folks just want the alerts. It's your choice, right? You're going to get the alerts and the signals for the trades, whether you attend the trading room or not. We record the thing. We do a recap. So if the time frame doesn't fit for you, but you're interested, it's available. We have a weekly live chat session on Wednesday evenings. I offer a one-on-one consultation. When you sign up to get a link to my calendar, and you're welcome to book time. Let's get you off to a good start. Right? Anytime you have questions, I'm happy to help. Right? I provide some risk management, option trading tools, and training as part of the subscription. You'll get access to some videos and some PDFs that just help with that, and ongoing support and training. I'm always available to answer questions and just help. I'm a trader. I enjoy trading. I enjoy talking to traders and talking about trading. So I am more than happy to take questions. We've got a discussion forum where you can log in and ask questions. Other customers can chime in. You can shoot me an email. You can come to the trading room. You can come to the live chat. I'm here. We're going to help you. Okay. And but wait, there's more, right? A lot of people asked about the Ichimoku Cloud and the settings. I have a course that's listed on my website. The Ichimoku Cloud training module. It's $247. It gives my proprietary cloud settings, written study guides, got trading videos, and a printable trade setup cheat sheet. It's all included in the course. List price $247. You can get it today for free if you take the 30-day stock and option picks trial. Same link, right? I've got it set right now. So if you hit that link, take the trial for $37, you're going to automatically get access to the Ichimoku Cloud training module. Okay, well, that's it. And I came in just under an hour, and I'm available if you have questions. I see a couple more symbols, so I'll knock those out. And then if you have other questions, go ahead and type them in. and I'd be happy to deal with those. But, you know, thank you for your time. And I hope you walked away feeling like it was a good use of your time and I did provide you something valuable, whether you are interested in signing up for my service or not. I hope you had a good experience here and found some interesting stuff to use. All right, Beyond Meat. That name cracks me up. I'm a dedicated carnivore, so I'm not sure what going beyond meat means when that's kind of the destination already. So, you know, it's been crushed. You know, it was a lot, you know, when it IPO'd, it was really exciting, and then it's been totally crushed. This is in a, in kind of a descending channel. I don't, you know, it's got a floor. Look at this floor. I would not try to short it here, right? And there's, you know, currently there's an upper boundary here. I would not be the least bit interested until we call it bottom fishing. Sometimes these ones that have just been beaten down, right? This one's down from over $220 down to 60. That's a beat down, right? Look for a high, higher low, new high breaking above the cloud, maybe the cloud changing color. I mean, that could happen, right? And it could maybe pop if it does that up to the top of this gap, right? And that's a decent move, right? If you can get in at 70 bucks and it goes to 85 bucks percentage wise, that's a big move. Trader says, explain the money back guarantee. Okay. So the offer is, you're going to sign up for $37. If you take the offer, you can use either PayPal or your credit card. It's going to get dinged for 37 bucks. And then it's going to be a reoccurring payment that will renew month by month at $97. That initial $37, if you get in 29 days and you go, yeah, it just wasn't a fit, you just shoot me a note. I'll send you a 100% refund. We'll stop the reoccurring payment. You will have been out $0. Trader says, do you ever have trading room free trials for non-members to try? I have tried that, and I do not do it anymore. There's something about putting a little skin in the game to come check it out. You can get a refund, right? But just found free trials. There's a thing that happens. They're hard to convert, so I don't do it. Are there indicators available for Ninjatrader? Absolutely. Ninjatrader's got Ichimoku Cloud, and there are some enhanced custom versions you can find on the web. You're welcome. Let me catch up on the symbols here. We did Beyond Meat. Yeah, like I say, I just have to kind of make fun of Beyond Meat. It's like, hey, if I wanted to be a vegetarian, I'd want to be a vegetarian, not to go eat vegetables that have been made to taste like meat. I don't get it. But that's just me. XOM, ExxonMobil. Been a big run. Oil's up. Everybody knows. The people who produce oil as well as distribute oil do well. People that just buy oil, kind of tough. All right, big move up, went flat forever. Kind of a tough, it's not really an Elliott Wave thing. Because it didn't really retrace yet. This wasn't really a wave 4. So sometimes they don't conform, and you just kind of have to bring some other techniques. You go, well, it's way above the cloud. So this trend has really run away, as the price of oil has. It's in an uptrend. It looks like it's starting to lose momentum. So we got this prior high. So I'm not excited about going long here. I would want to see a retracement back to the cloud somewhere, and then maybe there's a long. And then, you know, there's no short because it's in such a strong uptrend. So for me, there's not really a good trade there, you know, and I think USO is going to look the same. USO is the oil ETF. Yeah, it's just run too far. Right? There's no sign, no reason, no indicator here to take it short, and it's just run so far up, right? Looks like it could be running out of steam. There. A Zoom. Well, Kathy Wood said it's coming back. We'll see. It just broke through the floor, right? So it had a pretty good support level here, and it just broke through it. I would not short it. It's gone too far, too fast. Wait for, a new floor somewhere, and then wait for, Dow theory, some point, high, higher, low, new high, bust out. Maybe it'll happen, maybe not, right? I don't chase mature trends because you really don't know how far they're going to go. Let's wait for something new to happen. There's 6,000 publicly traded stocks and a couple thousand ETFs. I don't have to wring my hands over something sketchy. I'll just go find something awesome and trade that. All right. Trader. Yeah, there's going to be a recording sent out. There's usually a delay to get the thing rendered and formatted and all that stuff, but there will be a recording coming out. And look, we're right at an hour, so I think that's a good point to cut it off. I'll post that link one more time, or maybe Anna would. And then again, the offer is $37 for a 30-day trial, right, of my stock and option picks, and you get a bonus of the $247 Ichimoku Cloud course, and you got a money-back guarantee. The bonus is only available, right, when we're done here. That offer's done. You can still take the trial, but the offer for the bonus course, that is done. So what we'll do is I'll go ahead and end the presentation, hang on for questions. But if you want to get this bonus of the course, right, when Anna hits the button and the thing's over, then it's over, right? That's how it works. And so I think that's what I'm going to do, is I'm going to leave this slide up on the screen. I'm here to answer questions, and I just want to give you a chance, if you're interested in that offer, to go ahead and take it. All right. Thanks again for attending, and I really, truly hope that you found something valuable here. All right. We'll see you down the road. And if a question comes in, we'll hang here for 5-10 minutes. Probably can stop the recording on it because that'll be boring. And then we'll just hang here and take any questions. And then when we wrap it up, then again, that bonus goes away. All right. Hey, trade safe. No matter what you do, keep your winners big, your losers small. Right? Don't take big losses. Be careful. Use risk management. All right. Take care. We'll hang for a couple more minutes. If you do have any questions, just type them in there real quick. But at 10 after, we'll go ahead and shut it down. Thanks again for being here. And if you're trying to place an order, have any trouble, if we go offline, let me know. Shoot me an email. I'll put it in here. Dean@followmetrades.com. Pretty easy. We try to make all these things work and test them. Sometimes things go wrong. So there's my email, Dean@followmetrades.com. You can get it from the website, followmetrades.com. Right. So if you're trying to place an order, having any issues, we're here to help. You'll get that bonus. But we're going to wrap up at 10 minutes after the hour. Oh, I just scrolled down and saw there was a couple more questions. So let me see here. Tucker's asking, how can it help day trading the E-minis? You just use the exact same technique. I like day trading the SPY with options, right? That's my thing. But I like range charts, and they work on ES just the same way they work. So I like using the 10-minute, like here's the NASDAQ QQQ. You could do the NQs. Here's the SPY. You could do the ES. I like the 10-minute as a roadmap. What's the big trend? What are the expected levels? And I use range charts for my actual entries, and I use Ichimoku Cloud, right? When you expect, for example, right, this morning, this thing went up and bounced off the cloud. It started down, retraced into a tracement zone, bounced off the cloud, started heading back down. Then you look at your range charts and the cloud on the smaller time frame for your entries to manage the trade. So it works beautifully. Hey, Dave. Awesome. I'm looking forward to it. Trader, what's my P&L? It's on my website. Details. Many years of results there. They're all audited. You can drill in and see the details of every single trade over the last 6 years. So website is on the chapter. Yep, recording coming. You are welcome. Says he's been a vegetarian 43 years. I got no problem. I'm not trying to diss vegetarians. It's just the whole idea of Beyond Meat. It's like, if I was going to be a vegetarian, man, I'd just eat vegetables and enjoy it. I don't need vegetables to be turned into goop and pressed into a shape and taste like meat. It's just, why would I want that? That's just meat. But if some people like it, so that's cool, and they appear to be making money, so good for them. All right, hey, it looks like people are dropping, and the questions are slowing down. So once again, thank you so much. If you do end up with another question and you were wanting to get in and get that bonus, shoot me an email, dean@followmetrades.com. We'll work it out. All right, but trade safe. Keep the winners big, losers small, man. And we'll catch you down the road. And that is the end. Thanks.